Welcome back to the channel, everyone. Today we're talking about something that's super important, especially as we head into the new year, making smart investment decisions. Whether you're just starting out or you've been in the game for a while, these tips are crucial for protecting your hard-earned money and making sure it grows. We're going to break down the top 10 investment tips for 2025, brought to you by the SEC's Office of Investor Education and Advocacy. And trust me, these aren't your typical generic tips. We're diving deep into the latest scams, the things that are going to be huge in 2025, and how to make sure you come out on top. So grab your coffee, get comfy, and let's talk about how to make 2025 your best investment year yet. Alright, let's kick things off with a big one: relationship scams. You know, those situations where someone online showers you with attention, builds your trust, and then bam! They hit you with an amazing investment opportunity. These scams are becoming more and more common, with scammers using social media, dating apps, even sneaking into group chats you didn't join. Here's the thing, just because someone seems nice online, doesn't mean they have your best interests at heart. Never, and I mean never, invest based solely on someone's recommendation online. Do your own research, verify everything, and if something feels off, trust your gut. It's better to be safe than sorry. Now let's talk about those exclusive pre-IPO deals. You see them everywhere: social media, websites, even those spammy emails we all get. They promise huge returns if you invest in this little-known company before it goes public. But here's the reality: most of these pre-IPO deals are completely fake, and even if they're legitimate, getting in on a pre-IPO is incredibly risky and usually reserved for accredited investors with deep pockets. So, unless you're rolling in cash and have a team of lawyers on speed dial, it's best to steer clear of these pre-IPO pitches. Stick to publicly traded companies with a proven track record. AI is everywhere these days, and you know what that means? Scammers are using it to their advantage. They're promising insane returns with these AI-powered trading platforms that magically predict the market. Listen, AI is a powerful tool, but it's not magic. If someone is guaranteeing you crazy profits with their AI system, run the other way. Real investing takes time, research, and a little bit of luck. Don't fall for the hype. Okay, let's shift gears a bit and talk about something that's actually really important for all investors: the new T+1 settlement cycle. Now this might sound a bit technical, but stick with me because it directly affects how you buy and sell stocks. Basically, the SEC has shortened the time it takes for a trade to settle from 2 business days, T+2, to just 1 T+1. This is designed to reduce risk and make the market more efficient. So, what does this mean for you? Well, you need to be even more prepared when making trades, have your funds ready to go, and be aware of the shorter time frame. This one seems obvious, but you'd be surprised how many people skip this step. Before you invest in anything, you need to do your research. Understand what you're investing in, the risks involved, and the potential rewards. Thankfully, you have a wealth of information at your fingertips. Use the SEC's Edgar website to access company filings, read industry reports, and follow financial news. The more you know, the better equipped you'll be to make informed decisions. Now, if you're working with a financial advisor, that's great. But don't just blindly trust anyone with your money. Take the time to check their background and make sure they're legit. Head over to the SEC's investor.gov website and use their free tools to verify your advisor's qualifications and disciplinary history. It's a quick and easy way to gain peace of mind and ensure you're working with a true professional. Chapter 7. The silent killer of returns: investment expenses. Here's a hard truth about investing. Fees can eat into your returns like crazy. Those seemingly small percentages that investment funds charge can add up over time, significantly impacting your overall gains. Always, always, always compare expense ratios and fees when choosing investment products. Lower-cost index funds and ETFs can be a great way to keep more of your money working for you in the long run. Chapter 8. Don't put all your eggs in one basket. The power of diversification. You know that saying, don't put all your eggs in one basket? Well, it rings true for investing too. Diversifying your portfolio across different asset classes, industries, and geographies is one of the best ways to manage risk. Think about it. If one investment takes a hit, the others can help cushion the blow. Mutual funds and ETFs are a great way to achieve instant diversification without having to pick individual stocks yourself. Chapter 9. Your biggest enemy? Your own behavior. We've talked about scams, fees, and diversification, but you know what? One of the biggest obstacles to investment success is often ourselves. Our emotions and biases can lead us to make irrational decisions that hurt our returns. Avoid common investing mistakes like chasing past performance, trying to time the market, or holding on to losing investments for too long. Remember, slow and steady wins the race. Chapter 10. Social media, friend or foe for investors. Social media can be a fantastic tool for staying informed about the market. You can follow experts, join investing communities, and get real-time updates on companies you're interested in. But here's the catch. Social media is also a breeding ground for misinformation and scams. Take everything you see with a grain of salt. Double-check any hot stock tips and verify information from seemingly reputable sources. Remember, if it sounds too good to be true, it probably is. Outro: invest smart, avoid scams, and crush your financial goals. That's it for our top 10 investment tips for 2025. We covered a lot of ground today, from avoiding scams to understanding the new T+1 settlement cycle. The most important takeaway is this: be informed, be cautious, and always do your own research. Remember, investing is a marathon, not a sprint. By staying vigilant, making smart choices, and avoiding common pitfalls, you'll be well on your way to achieving your financial goals. Thanks for watching, and as always, don't forget to like, subscribe, and hit that notification bell so you don't miss out on any future videos.